talk about equity this time, okay? Another way to think of this is skin in the game. And what the bank means by skin in the game is how much of your money are you going to commit to this investment in real estate. Let's take an example. Let's say you want to buy a $1 million home. Well, the standard is that a bank wants you to put 20% of that, of your own money, into the transaction. So in this example, you'd have to come up with $200,000. And they want to make sure that that's your own money. How do they determine that? Well, you're going to give them a couple of months worth of your bank statements, and they're going to look to make sure there's no strange large deposits that just showed up. Because you do have to prove where your money comes from. Now, don't have $200,000? Well, there's some other things we can do. For example, you can get a gift. This gift can be from a family member, your father, your mother, your grandparents, your brother or sister. With some banks, an uncle would be okay, although with some other banks, they think that's getting a little too far out there. So let's just talk about immediate family members for now. And if that family member can give you the full $200,000, or not loan you, remember, but give you the $200,000, you're okay. Anything less than that, you've got to have at least 5% of your own money into the transaction. Or in this example, 5% would be $50,000. Now, if you don't have any rich uncles or rich parents or anything like that, you're wondering, what can I do to get into $1 million house if I can't come up with $200,000? What if you've got 10%? In this case, $100,000. Bank is not going to loan you $900,000 on $1 million home, but you may be able to break the financing into two different pieces. You may be able to get a loan in first position to $800,000 and then get a second mortgage for the other $100,000. And when you combine that with your $100,000 in down payment, there's your $1 million property. Of course, you've got to qualify to make the payments on both the first and the second mortgage, but this is often a great way for somebody that's got good income but maybe hasn't had enough time to save $200,000. Okay, let's talk a little bit more about equity and about skin in the game. I told you how on a $1 million property, the bank is going to want to see at least $200,000 from you, but that there are alternatives where you might be able to get by with just $100,000 as a down payment and get a second mortgage for the other $100,000. Okay, so now you might be asking yourself, well, where can I get that $100,000? Well, obviously the first choice is going to be cash. Anything you've got on hand in marketable securities. You may be able to borrow against your 401k plan. That's something that you want to check with your 401k administrator to see if you can borrow. And if you do borrow against your 401k, we won't have to count the repayments into that plan against you. So that's always a good option to consider. The things that you cannot use, you can't use what we call mattress money. What is mattress money? Mattress money is any money that can't be traced. You can't borrow it, which is why we talked before about if you have a relative, a direct family member, they can give you a gift, but that's not a loan. You're not borrowing that money, that's being given to you. So some people have asked me, okay, 3 years ago I loaned some money to a friend of mine, and last month they paid me back. That's why this $50,000 suddenly appeared in my account. Can we use it? Well, if you can go back 3 years and show your bank statements that show that $50,000 went from your account and you have a notarized loan agreement, and now you can show that that money came back into your account, we can give it a try. Without that kind of supporting documentation, probably not. And there's probably 100 different scenarios that we don't have time to go over right now, but if you have any questions, then of course, give me a call, let's talk about it.